What's up, guys? It's your girl, the Currency Chick, and I'm back at it with another video. Um, on this video, I would like to show y'all how I do my top-down analysis and analyze the market before the market opens for the week. So let's get right into it. Okay, I'm gonna be analyzing gold. So this is my gold chart, and basically, what I do is I start at the monthly time frame and look at the monthly chart. And as you can see, gold has been going up, 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 and all the way up for the last few years now, just been shooting up. So that will let you know that gold is currently in buyer's territory. Um, a lot of buyer's momentum. This past week, it hit the highest it ever been was like at 46, 47. Um, then I go down to the weekly and look at the weekly chart. And as you can see, it's basically the same thing. Gold has been going up, 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 up. So that also lets you know that the weekly is in bad territory. And after you go to the weekly, you go down to the daily. Daily, the same thing. The candlesticks are showing you a higher high and higher low and higher high movement. So it lets me know the daily is in a buy territory. So at this point, I will probably draw a trend line on this chart. I think I'm gonna take it from here, and I'm gonna draw a daily trend line. And basically, what I'm doing is putting this trend line on here, and the trend line is following the market in an upward formation. Okay. And also, as you can see, it broke a daily zone right here. Um, Let me put this on here. And I like to like kind of sort of label my chart so I could keep my eyes on stuff. So this is structure. So as you can see, it was going up, down, broke higher than this. That was a higher high, came back and created a higher low and pushed up again. So at that point, it broke the last daily higher high and started to create another high. So after I mark all of that up, um, well, let me show you one more thing before we move on to a smaller time frame. As you can see, this candlestick right here pulled all the way back to this zone and retested it. And at that point, it's now retesting this area as a structure, I mean, as a support zone. And it bounced right off of it and like shot right back up. So you need to keep that in mind. And then I go down to the 4 hour chart and just analyze the 4 hour. It's the same thing. You got higher highs and higher lows, higher highs and higher lows. So everything from the monthly, weekly, daily, 4 hour, everything is in an uptrend. So now you can see, on 4 hour term that, the candle came, bounced here and pushed straight up. So now sitting at this 4 hour, you see all of this right here, like the candlesticks just bunched all up and stuff. That's basically called consolidation at that point. So me personally, I don't trade no consolidation. I wouldn't recommend nobody do it. Some people do it on smaller time frames, but you know, um it's not really, giving you any real information. It's not creating higher highs and higher lows. It's just bunched all up. And as we go down in time, you will see it. As I go lower in time, you will see it and it just looks crazy. But anyway, um, yeah, and then I'll draw another trend line on this 4 hour like this, following the uptrend. And now all of this stuff right here is just basically templates I made for myself. You don't have to do this, or you can if you want to. That's all up to you. So as you can see, we have a gap right here. And well, no, not that gap, this gap. We got a gap right here, near this little structure break. And last week I was hoping that the market would have pulled back and filled this gap. And it came close on Friday, but and then it missed and shot back up. So based off of this 4 hour, basically the trend is basically saying every time it touched this trend line, the price bounced up. Every time it came to the trend line, the price bounced up. It came, it went through the trend line, but it bounced back up because this is a strong zone right here. It's a strong support zone. So it didn't break it. So um at that point, um I would probably, well, let me go down to the smaller time frames first. But what I'm gonna do at this point is split my screen. So when you split your screen, now you got another screen on the side that you can see, because once you do your analysis on a higher time frame, you enter on the lower time frames, or you should. That's how you get your entry points on a 15 minute, 30 minutes. Some people do it on the 1 minute or the five, but I probably wouldn't recommend that. But let me change this screen, make sure I'm on go. Change the screen to the 1 hour. So let's see. See, still choppy all up in here. But let me go back over here and put this screen on the 1 hour. And I think I want to put this right here because, like I said, normally this gap, a lot of times when the market opens on Sundays, you get gaps in the market. And as you can see, if you look down at the bottom of my chart, that gap, and when the market opened, it says Sunday. That happened on January 11th. It was that gap that was created. And a lot of times the market like to fill the gap sometimes before it continues doing what it's doing. So we could possibly, well, I'm not gonna even say that because that daily zone is right there. But I was expecting last week for that gap to get filled. Not to saying it couldn't happen, it could happen, but we just gonna wait on that. Um Now let me go back to this side for a second. And it's a lot of choppiness on this 15-minute time frame right here. So basically, at this point, at this point, what people would probably say is I see a break of structure on the 15 minute break of structure to the downside. I personally wouldn't counter trend trade this because all of the other time frames, the 4 hour, the day, even the 1 hour, all of the time frames are, basically in bad territory. So no, no. If it's gonna possibly, retrace and go and fill its gap or whatever, let it do whatever it's gonna do, to the downside. And then I would basically wait for that to finish out and, get in back on the buy and ride it back up because it's in like serious buy territory. Um, and I'm pretty sure people who trade gold, that they probably anticipating for it to go up some more this week. Not to say that it will, it could do whatever it want to do, to be honest with you, but it's just been on a hella bull run. So that's probably, but let me see something also. I'm gonna click back over to this side right here and make it a full chart for a second. Um, Let me see something. Okay, so I see also that we have divergence, and basically divergence is if you use the RSI, which this is what this graph is on my chart, it is called the RSI, Relative Strength Index. It's basically an indicator to but you use it as an indicator to let what the chart is doing. And when I speak of divergence, I'm basically saying that if you notice how this graph was going up and then all of a sudden the graph started going in a downward motion. But look at the chart. If I put this cursor right here and then go all the way up to the same spot if you notice the chart, the candlesticks are basically going in a sideways motion, and the chart is a downward motion. That is divergence. Divergence is basically when the RSI is doing one thing and the chart is doing something different of what the candlesticks are doing something different from what the RSI is doing. So we got divergence on the 1 hour. Now let me see. Let me see. We have divergence on the 4 hour. Let me see the daily. Ooh. We even have it on the daily. So we got a lot of divergence going on these time frames. So that is like a really good sign that the market could possibly retrace. That's like one confirmation. Now I wouldn't take that as a confirmation by itself because I've traded divergence alone and it didn't do it. So you would need another confirmation to let you know that it's gonna sell off if you attempt to like get in for a sale. So but like I said, I probably won't fool with the sales unless it's a good sale. But as of right now, I'm waiting for the buy to take back over after all this choppiness and everything is done. So at that point, you probably could zone this out, zone the whole box out, and just wait for it to break the zone before you enter the trade. So it's either gonna break to the low side and retest the back side of the candle or the zone and then come down. Or it's gonna break out of the box, retest, and go up. So you gotta let the market show its hand before you do anything. And by showing its hand, the candlesticks, that's what I mean. The candlesticks is gonna show you based off if you get a bullish engulfing, a bearish engulfing, or something like that. But like I said, the more experienced people, they can trade this little choppy stuff right here. But I wouldn't because it's really choppy and ugly. Even though you got this breaker structure on this 15-minute time frame, which somebody will pull a fib out. And let's see if I pull a fib out and draw it from high to low. Um, oh, that's too ugly. Whatever. But basically, that's what I do. And at that point, it's just a waiting game. After you mark your charts up, let me split the screen again. What I do, mark my charts up, split the screen, and you waiting for, the market to show its hand, and you base your trades off of that, off of the breaks of structure and stuff like that. So, I'll probably make another video later, once gold started to show me something really show me something. The only thing, like I said, it would be nice if it tapped the zone all the way and then give me the reversal to buy back up. But like I said, the daily structure is right here, and that's a strong area, so it probably won't actually fill that gap. It'll probably possibly push back from where it's at. So that's all I have for now, guys. So we'll see how the market plays out this week, and I'll be back with another video later. Once again, it's the Currency Chick. All right, guys, see you later.